Morning everyone. Welcome to Offices Adda 24/7. My name is Niharika Avalia and I am with you for the area of AFB, Accounting and Finance for Bankers. So let's continue with the class. Please let me know if I'm audible as well as visible. Morning everyone. Welcome to Offices Adda. Okay. So, if you haven't looked on to our app yet, then kindly go ahead and check out our app. There you get all the features towards looking for the classes, for the latest updates regarding the examination, as well as the further details of our courses, as well as the study planners. Everything at one point of time at one place, that too in your phone, or that is really helpful when it comes to your studying as well. So if you're looking forward to that, then kindly go ahead and download our app now for the ultimate experiences towards the various features of our 24/7 app. And at the same time, if you haven't subscribed to our channel yet, then kindly go ahead and subscribe to Offices Adda 24/7 and don't forget to press the bell icon so that you get the notifications whenever the classes are coming, right? Okay. At the same time, our new batches have just started. One batch is for JAIIB English medium and the bilingual batch. Both the batches have just started. The bilingual batch has started on 5th of September, while English medium will start from the coming 12th of September. So if you're looking forward towards anything related to the examination, then do not delay it, because we are coming up with another live batch. Then the time is definitely getting less and less. The examination will be conducted in November, December. So if it is in November, then you don't have enough time now. So that means you just have September and October in your hand. So you shouldn't really delay it any further, and you should look forward towards your classes properly, right? Okay. Now the next point that comes is for the timings and the planning. You can look forward to our planners. The planners are available in that particular section of these batches only, where you can find out when and how the batches would be covered up, till what time the batches are going to continue. That will be really helpful for everyone who's looking forward towards the examination. Okay. So now these are one of the few questions that we are starting with. The first question says, calculate the closing stock from the following details. Opening stock is given, cash sales is given, credit sales is given, purchases is given, and they state that the rate of GP is 1/3 of cost. If I'm given the cash sales and credit sales, all I need to do is I need to add them up. This will give me the total sales. The total sales will be 1 lakh. My GP is 1/3 of cost. The quick tip, if it is 1/3 of cost, it would be 1/4 of sales. So the GP will be, if this is sales, 1/4, it would be 25,000. Once you get this, then you just have to look forward to the COGS there. If the COGS is 25,000, then 20,000 is the opening stock, plus purchases is of 70,000, and the closing stock is not known to us, but what is known to us is what is left is 25,000, 75,000 as our COGS. So in this case, all you need to do is, if you have 20,000 plus 70,000 minus your COGS is equal to your closing stock here. So it would be 15,000. This is the answer for this particular question. an easy question which requires only a little calculation. Just looks as if it has a good amount of calculations involved, but there are not much calculations in it. Right, now let's move on. This is the answer. Now let's move on towards the next question. A huge amount of money is spent on by the entity to advertise a new product. Whenever you are starting with a new product, sometimes you advertise it and advertise it as a at a very higher level. It would be treated as, what would be it treated as? A revenue expenditure, capital expenditure, deferred revenue, or either A or B? If we talk about the huge amount of money which is spent by the entity to advertise, that means they are spending a good amount of money to have audience which would stay with you for a longer period, because you spend good amount of time on the advertising. This particular amount, which is basically very huge, will be treated as a deferred revenue expenditure, because this will have an impact over the people for a longer period than 1 year. So somehow it is said that such kind of expenditures which are done once and will have a stronger impact over the period of time, they are treated as a deferred revenue expenditure. Next point that says that income tax paid by the sole proprietor is treated as. When a sole proprietor pays the income taxes, does it go in the trading, does it go in the P&L, or as a deduction from the capital in the balance sheet, or none of the above? When we look forward to the income tax is actually treated as a drawings, and drawings are to be deducted from the capital. So wherever there would be a balance sheet, in the balance sheet wherever you have the capital, from capital we deduct the drawings. So the correct answer is C. The answer is visible, but okay. Outstanding rent is to be treated as, when we have an outstanding rent, what is the journal entry for the outstanding rent? It is actually rent account debited to rent outstanding. So once you have this particular thing, this would be treated as, you have a rent outstanding, which particular point it simply states that this is basically a liability on the head of the organization, right? So then this is basically a liability which would be shown in the balance sheet. It's neither an expense nor an asset, nor an income, because this is basically a burden on the company that they are supposed to pay, which they haven't paid yet. Oh, okay, let me just okay. So let's talk about this. If we have debtors in the trial balance of rupees 1 lakh, there was a further bad debt of 10,000 and the provision was to be made at 4%. What is the sequence in which we make the provisions? If we earlier had 1 lakh rupees in our pocket, then there was a bad debt of 10,000, which gives us 90,000, right? So basically in the trial balance we'll have 90,000 and it would be at the rate of 4%. So that would be 3,600, would be taken as basically, okay, what happens is if I had 1 lakh rupees in my pocket and I thought that, okay, 10,000 has not paid even a single penny, it's time that I write them off. So basically, what I'm left with is 90,000 good people. Among those 90,000 good people, also, I am scared that maybe 4% will not pay me the amount. So basically, there I have it, 90,000 at the rate of 4%, that gives me 3,600, which would be deducted. So if it is 90,000, then it would be 86,400. That is your answer. The sequence for solving these kind of questions is whatever your debtor would be. From the debtor, you first of all deduct the bad debts. Whatever is left, then what you do with it is, whatever bad debts you are left with, you make a provision on it. This is the sequence. First of all, invest in the bad debts, then that means write off the bad debts, and whatever is left, make a provision on it. Right? Now, the next question. Identify the accounting standard which deals with the provisions, contingent liabilities and contingent assets. I believe contingent assets liabilities has never made it to the balance sheet. They are always in the footnote. Right? These are always in the footnote when it comes to the accounting standards. That too, they are quite low. When it comes to this scenario, they are the accounting standards are, in terms of accounting standards even, it is by far what the last one that we talk about, that is AS 29. There are other accounting standards as well, but currently when we talk about, roughly AS 29 is being applicable. Right, this is for the provisions, contingent liabilities and contingent assets. These are those assets and liabilities which haven't materialized yet. There is no sense of certainty in it. Since there is no certainty, so the chances are that we might have to pay, we might not have to pay. So because there is an uncertainty involved, it doesn't go in the balance sheet, it stays in the footnote. So basically, this particular standard talks about whatever money we'll have to pay in terms of the payments. There is a provision, certainty wise provision is more certain, while the contingent liabilities and assets are somehow not certain yet. Next point, somehow the answer is visible, but let's discuss it. Errors are rectified by using suspense account. The errors, when there are errors, those errors are basically how these errors are basically settled. In terms of suspense account, what happens in the trial balance, we realize there is an item which leads to the unmatching scenario of the trial balance. When the trial balance does not match, then we try to find out what is the reason that it's happening. So basically, this happens after the preparation of the trial balance, not before, but after the preparation of the trial balance. Okay. Now, when we talk about the trial balance showing the arithmetical accuracy of the ledger accounts, but it is not a dash proof of accuracy. Basically, when we talk about the trial balance, it is not a conclusive, exclusive, submissive, or inclusive. It is not a conclusive proof because it just tells that the balance sheet, the trial balance matches. That means the balancing figures of the ledger are correct. But who tells you whether there is something which is totally omitted? There is something which has got compensating errors. Those things are not known to us. That's why it is not a conclusive proof. It just helps to check that the ledger is being properly created. Next question. Satisfactory ratio between the long-term debts and the shareholders' funds is. When we talk about the shareholder funds and the long-term debts, it is 2:1. For every 2 rupees of debt, we can have 1 rupee of equity. If the total amount is 3, then it should be more of debt than equity. One of the basic reasons is we get tax exemptions or we get tax deductibility in the interest while we do not get it in the dividend. That's why we keep a minimum amount of the equity shares, but the maximum money is taken from outside. Right? The correct answer is 2:1. The last question would be dash are highly liquid assets that can be converted into cash shortly. This is as per accounting standard 3. Cash equivalents, inventories, non-current investments or non-current assets. When we talk about the liquid assets, these are highly liquid assets which can be converted into cash shortly. Bank balance, marketable securities, within no time they can be converted into cash without any loss, right? So they are called cash and cash equivalents. They are called cash equivalents as per accounting standard 3, right? So this is it for the day. Thank you so much for being there, and if you are looking forward towards JAIIB and CAIIB classes, then kindly go ahead and use the discount of Y541 to avail the discount of 77% or more. Sometimes we have additional offers going on as well, so kindly do not leave this opportunity to grab the offer as early as possible. So look forward to our courses, as well as the details of the same would be available in the app as well as on the website. Kindly go ahead and check it out on our website as well, that is www.adda247.com. So kindly go ahead and look forward towards your preparation in a proper way. Thank you.